Look, we need to have a serious talk because the math just stopped making sense for a lot of you. Last Friday, the SP 500 closed at another record high, well over 7,400, and people are losing their minds. The news says the economy added 115,000 jobs, which is double what the experts predicted. But I know what you are thinking. Oh shit, if things are so great, why does my rent feel like a heist, and why is a bag of chips $7? Here's the deal. You are waiting for a 2008-style collapse that might never come because the game has fundamentally changed. I get it, man. I remember being 22 and thinking I could outsmart the market with options and leverage. I lost money faster than a bad habit and felt like the whole system was rigged against me. I used to stare at the charts until my eyes bled, trying to find that one penny stock that would take me to the moon. I was broke, stressed, and honestly, I was pretty stupid with my capital. But the truth is, while we were busy complaining about the rigged system, the economy was going through what I call the jobs reset. We are seeing 4.3% unemployment and 3.6% wage growth right now in 2026. That sounds good on paper, but underneath the surface, companies are cutting the fat like never before. Just in the first 10 days of May, we saw tens of thousands of layoffs across tech and finance. Spirit Airlines literally shut down. Major corporations are slashing thousands of roles. But here's the counterintuitive part that you need to swallow. The stock market does not care about your job security or your feelings. The market is a cold, forward-looking machine that only cares about one thing, which is future earnings. The market is betting on the fact that AI and automation are making companies more profitable with fewer people. They are doing more with less. And that is why the SP 500 is hitting 7,412 while you are worried about your cubicle. If you are sitting on the sidelines waiting for 2% inflation to come back, you are going to be waiting a long time. Inflation is sticky at 3.3% or higher, and Kevin Warsh is about to take the chair at the Fed very soon. He is not Jerome Powell. He is looking at inflation ranges, and the market is already pricing in a world where 3% is the new 2%. So how do you actually win in this weird, expensive, and high-interest version of reality? You stop playing the victim and start playing the owner of the assets. I stopped gambling on individual trash stocks and moved to a heavy index strategy years ago. My current move is 70% VOU for that broad market growth and stability. I put 20% into SHD because in a high interest rate world, cash flow and dividends are king. The last 10% goes into VOO or specific AI infrastructure because that is where the productivity is happening. I did not get to $120,000 by being lucky or having a trust fund. I got there by dollar cost averaging into VU every single paycheck since I graduated in 2020. Even when the headlines said the world was ending and the pandemic was crushing us, I just kept buying. Living below your means is not about being cheap or suffering. It is about being dangerous and prepared. It is about having the ammo to buy when everyone else is paralyzed by fear and doubt. Housing affordability is a nightmare. I know that better than anyone. Mortgage rates are hovering around 6.3% and buyers are absolutely exhausted. But if you are waiting for a 30% housing crash to buy a home, you might be renting for the next decade. Supply is still tight, and the people who own homes have too much equity to panic sell. The new era of wealth is not about timing the bottom perfectly. It is about time in the market and being flexible enough to learn new tools like AI. If you are not using AI to 10 times your own productivity at work, you are the one who is going to be reset. The market is forward-looking, and it is looking at a future where technology drives massive profits. You can either own a piece of those profits through your portfolio, or you can watch from the sidelines and complain. Be the person who buys the dip while others are posting doomsday memes on social media. Stay disciplined, stay liquid, and for the love of God, stop listening to the noise. The best time to build your foundation was 5 years ago, but the second best time is right now. Go get what is yours, because nobody's going to hand it to you. Let us talk about the psychology of a bull market during a cost of living crisis. It feels wrong, right? It feels like a glitch in the matrix when the SP 500 hits 7,400, but your grocery bill is up 40%. That is because the stock market represents the top 500 companies, not the average household. These companies have pricing power. When their costs go up, they raise prices on you, and their margins stay fat. That is why you must be an investor, not just a consumer. If you only consume, you are the one paying for the record high stock prices of the companies you buy from. If you invest in VOO, you are at least getting a slice of that price hike back in your brokerage account. I remember when I hit my first $10,000 in my account, I thought I was rich, and then I realized inflation had eaten a chunk of it. That was my wake-up call to focus on assets that outpace inflation, real estate, stocks, and your own skills are the only shields you have. Everything else is just noise. I see people on Reddit and Twitter every day predicting a massive crash. They have been predicting it since 2021, and they have missed out on one of the greatest runs in history. Do not be that person. Even if the market pulls back 10% tomorrow, it is just a sale for people with a long-term vision. My portfolio is built to handle volatility because I do not plan on touching it for 15 years. When you have a 15-year horizon, a bad month is just a blip on the radar. The jobs reset is real, and it is going to be painful for those who refuse to adapt. The skills that got you through the last decade will not get you through the next one. You need to be financially literate, tech-savvy, and emotionally stable. Most people fail at investing because of their emotions, not because of their lack of knowledge. They buy when things are high because they have FOMO, and they sell when things are low because they are scared. I do the exact opposite. I love red days because it means my $500 bi-weekly contribution buys more shares. That is the secret sauce. Simple, boring, and consistent. There is no magic pill or secret coin that will make you a millionaire overnight. It is 70% VO, 20% SCHD, and 10% whatever high growth sector you believe in. Keep your expenses low, keep your head down, and keep stacking. In 5 years, the people who are complaining today will still be complaining, but the people who started today will be looking at a much different reality. The transition to Kevin Warsh at the Fed is a signal that the easy money era is truly over. We are in a structural high-interest environment now. That means zombie companies will die, and only the strong will survive. VO naturally filters for the strong, which is why it is my core holding. It automatically replaces the losers with winners. You do not have to be a genius to win, you just have to stay in the game. The stock market is a device for transferring money from the impatient to the patient. Which one are you going to be? I chose to be patient, and it is the best decision I ever made. When I reached $50,000, the compounding started to feel real. When I reached $100,000, the portfolio started growing more in a month than I was saving. That is the tipping point where your money starts working harder than you do. But you will never get there if you keep jumping from one trend to another. Pick a strategy and stick to it through the fire. The 2026 economy is a beast, but it is a beast you can ride if you have the right gear. Stop looking at the price of gas and start looking at the number of shares you own. The shares are your soldiers in the war against inflation. Every share of VO is a tiny worker earning money for you while you sleep. Build your army, protect your capital, and never let the doom and gloom of the internet steal your future. The data is clear, the trend is up, and the opportunity is massive. We are living through a historic shift in how wealth is created. The old way was working for a pension and saving in a bank account. The new way is owning the platforms, the algorithms, and the infrastructure. That is what the 70-20-10 split represents. It is a modern portfolio for a modern world. Do not let the complexity of the world paralyze you. Start with $10 if you have to, but start. The power of compounding is the eighth wonder of the world for a reason, but it only works if you give it time. I am here to tell you that it is possible to build wealth even in a chaotic economy. I am doing it, thousands of others are doing it, and you can do it too. No more excuses about the Fed or the government or the jobs report. Focus on what you can control, which is your savings rate and your asset allocation. That is the only way out of the rat race. I will see you guys in the next one. Keep your head up and keep buying. Remember that the stock market has survived wars, recessions, and global panics. It will survive 2026 too. The only question is whether you will own a piece of it when it reaches the next milestone. I am betting on the innovators, the builders, and the earners. I am betting on the companies that are driving the SP 500 to 7,400 and beyond. If you want to join me, the blueprint is right here. Check out the links in the description if you want to see exactly which apps I use to automate this. Automation is the friend of the lazy investor, and I am definitely a lazy investor. I do not want to spend my weekends analyzing balance sheets. I want to spend my weekends living my life while my portfolio grows. That is the true definition of financial freedom. It is not about having $1 billion. It is about having enough that you do not have to worry. And $120,000 is a hell of a start. It gives you options. It gives you breathing room. It gives you the ability to say no to things that do not serve you. That is what I want for all of you. So let us stop talking about it and start doing it. The 2026 jobs reset is here. The market is at 7,400. The time is now peace. Actually, let us go deeper into why SAG is so critical in this 2026 landscape. Many people think dividends are for old people who are about to retire. That is a massive mistake. In a high interest rate environment, companies that can pay and grow their dividends are the true high quality businesses. They have real cash flow, not just paper profits or hype when the market gets volatile because of a bad jobs report or a Fed announcement. South Carolina HD acts like a stabilizer. It does not drop as hard as the tech-heavy growth stocks, and those quarterly dividends, man, they feel so good when they hit your account. I reinvest every single penny of those dividends back into more shares. That is how you turn a small snowball into an avalanche. Imagine getting paid just for owning a piece of the world. Best companies. That is what dividend growth investing is all about. And when you combine that with the growth of VO, you have a powerhouse combo. I see kids spending $1,000 on a new phone every year. That $1,000 invested in SHD 5 years ago would be paying for half your phone bill by now. It is all about the trade-offs. Are you willing to sacrifice a little bit of temporary comfort for permanent freedom? That is the question I asked myself in 2020 when I was eating ramen and buying fractional shares of index funds. It was not glamorous, but it was effective. Now I look back and I am so glad I did not buy that car or those expensive clothes. The freedom I have now is worth more than any physical object. The 2026 economy is punishing the consumer and rewarding the owner. You see it everywhere. Subscription prices are up, insurance is up, utilities are up, but if you own the companies that provide those services, you are on the right side of the transaction. The jobs reset is forcing everyone to reevaluate their value. If your job can be done by a script or a robot, you are at risk. But if you own the robot through your stock holdings, you are winning. It sounds harsh, but that is the reality of the technological revolution we are in. We are moving from a labor-based economy to a capital-based economy. In a labor-based economy, you trade time for money. In a capital-based economy, your money makes money. The 70-20-10 rule is your bridge to that capital-based world. It ensures you have growth, income, and a little bit of speculative upside. I keep my 10% in VOO or specific tech plays because I want exposure to the winners of the AI race. Companies like Nvidia and Microsoft are the landlords of the digital age. Everyone has to pay them a tax to use their tools. I want a piece of that tax, but I do not put 100% in there because I am not a gambler. I am a builder. Wealth is built brick by brick, share by share. It is not about the home run, it is about the base hits that keep coming. If you can stay consistent for 12 months, you will be ahead of 90% of people. If you can stay consistent for 60 months, you will be ahead of 99% of people. Most people quit in the first 6 months because they do not see $1 million yet. They do not understand that the first 10,000 is the hardest. Once you cross that threshold, the momentum starts to pick up. The 2026 market is offering a lot of opportunities for those who can see through the smoke. The smoke is the news, the politics, and the fear. The fire is the productivity, the earnings, and the innovation. Stay focused on the fire. I do these updates every Sunday because I want to be your wealth partner. I want to be the guy who tells you the truth when everyone else is trying to sell you a dream. The truth is that it is hard, it takes time, and it requires discipline. But the truth is also that it is 100% worth it. I went from $0 to $120,000 in a few years by following this exact script. No shortcuts, no scams, just VOO, South Carolina HD, and a high savings rate. If I can do it as a regular guy who graduated in a global crisis, you can do it too. The 2026 jobs reset is not an end, it is a new beginning. It is a reset of expectations and a reset of how we view work and money. Make sure you are on the right side of the reset. Smash the like button if you got value from this and leave a comment below. Tell me your portfolio allocation or what you are struggling with. I read every single comment because I am in this with you. We are going to build this wealth together. Do not let the 7,400 level intimidate you. The market will hit 8,000, 9,000, and 10,000. Eventually, the only thing that matters is how many shares you have when it gets there. Stop checking the price every 5 minutes and start checking your consistency. Consistency is the only metric that matters in the long run. I will see you in the comments and in the next video. Keep grinding, keep saving, and keep winning. The future belongs to the owners. One more thing before I go, let us talk about the lifestyle side of this. Living below your means is the ultimate flex in 2026. In a world where everyone is trying to look rich on social media while being one paycheck away from disaster, having $100,000 in a brokerage account is the real power. It gives you the power to walk away from a toxic job. It gives you the power to take a risk on a new business idea. It gives you peace of mind when the headlines start talking about a recession. I live in a modest apartment, I drive an old car, and I do not buy designer gear, and I have never felt more successful because I know that every dollar I save is a dollar that is out there working for me. Money is a tool, not a trophy. Use it to buy your freedom, not to impress people who do not care about you. The 2026 economy is a harsh teacher, but the lessons are valuable. Lesson 1 is that nobody is coming to save you. The government is not going to fix the housing market. The Fed is not going to make your groceries cheaper. It is up to you to increase your income and invest the difference. Lesson 2 is that the best investment is your own ability to earn. Learn the skills that the 2026 market demands. AI, data, robotics, and financial management are the pillars of the new economy. Combine those skills with a solid investment plan, and you are unstoppable. I am just a guy who decided to take his finances seriously 5 years ago, and it changed my entire life. It can change yours too. The jobs reset is happening right now. The SP 500 is at 7,400. The world is changing. Are you ready? I think you are. Let us get to work. Look, the reality of the 2026 labor market is that it is no longer about showing up and doing a task. It is about creating value in an automated world. That is why the unemployment rate stays low even as layoffs hit the news. The roles that are being cut are the ones that a machine can do better. The roles that are being created are the ones that manage the machines or provide high-level strategy. If you are in the former category, you need to pivot fast. The stock market knows this, which is why tech stocks are leading the charge. They are the ones building the tools for the reset. When you buy VOO, you are buying the leaders of this revolution. When you buy SHD, you are buying the companies that provide the essential services that keep the world running while the revolution happens. It is a balanced approach to a chaotic time. I spent my early 20s worrying about things I could not control. Now I only focus on my bi-weekly contribution and my skill development. That shift in focus is what took me to $120,000. It is about removing the noise and doubling down on the signal. The signal is the long-term growth of the global economy driven by innovation. The noise is the daily volatility and the political theater. Ignore the noise and follow the signal. I know it is hard when you see your bank account balance barely moving, But remember that the first few years are the foundation. You are building the roots of a tree that will eventually provide shade for the rest of your life. You do not plant a seed and expect a tree the next day. You water it, you protect it, and you wait. Investing is the same. Water your portfolio with regular contributions, protect it by staying diversified in VOO and SCHD, and wait for the power of compounding to do its thing. The 2026 market is a great time to be a buyer if you have the right mindset. Prices are higher than they were, but they are lower than they will be. That is the only thing you need to know. The trend of human progress is always up and to the right over the long term. Bet on humanity, bet on innovation, bet on yourself. I am going to keep sharing my journey with you guys every step of the way, the UPS, the downs, and the hard truths. Because we are all trying to figure out this new world together. The old rules are gone, but the new rules are actually better if you know how to play. Rule number 1 is always pay yourself first. Rule number 2 is stay in the game at all costs. Rule number 3 is keep learning. If you follow those 3 rules, you will be just fine in 2026 and beyond. The SP at 7,400 is just a number. The jobs reset is just a phase, but your financial freedom is forever. Make it happen. I am signing off for now, but the conversation continues in the comments. Tell me what you think about Kevin Warsh or the current state of the market. Let us get a discussion going. Stay sharp, stay humble, and keep stacking those shares. The future is bright for those who own it. Oh, and one last thing, do not forget to check the description for the Patreon link if you want to see my actual trades and deep dives. We are building a community of people who are serious about their money. No hype, no nonsense, just results. See you over there. Peace out. Seriously though, let us look at the 115,000 jobs number one more time. It is fascinating because it shows that even with all the talk of a cooling economy, businesses are still hungry for talent, but they are hungry for specific talent. They want people who can navigate the digital shift. If you are in healthcare, social assistance, or transportation, you are seeing growth. If you are in traditional finance or manufacturing, you are seeing stagnation. This is the structural change I was talking about. The economy is not shrinking, it is morphing, and the stock market is the first place that shows this change. The rise in the SP 500 to 7,400 is a reflection of this new, more efficient economy. Investors are realizing that a more efficient economy is a more profitable one, and higher profits mean higher stock prices. It is a simple equation that many people miss because they are too focused on the negatives. Yes, debt is high, yes, housing is expensive, but businesses are thriving, and as an investor, you want to be where the growth is. I know it feels like we are living in two different worlds, the world of the stock market and the world of the kitchen table. Your job is to connect those two worlds by moving money from your kitchen table into the market. That is how you bridge the gap. That is how you ensure that the record highs of the SP 500 actually mean something for your life. When I started my journey, I felt like a stranger in the world of finance. I thought it was only for people with suits and fancy degrees, but then I realized that the market is just a collection of businesses selling things to people. If you understand people and you understand value, you can be an investor. The simplicity of VOO is what saved me. It took away the need to be an expert. It allowed me to just own the entire market and benefit from the collective genius of the world's best CEOs. That is the ultimate hack. You do not have to be smarter than the market. You just have to be more patient than the market. The 2026 economy is going to be a wild ride, but you are in the driver's seat. Decide today that you are going to be an owner, not just a bystander. Decide that you are going to build a legacy, not just pay bills. The jobs reset is your opportunity to redefine your relationship with money. Take it. I believe in you. Let us make 2026 the year. We all hit our financial goals. No more waiting, no more excuses, just action. I am done. Now for real this time. See you guys soon. Wait. I almost forgot to mention the impact of the labor force participation dip. It is a small detail in the report, but it is huge for your strategy. Fewer people participating means the labor market is tighter than the headline unemployment rate suggests. This means wage pressure is going to stay high for a while, which means inflation might stay sticky for a while, which is why you need those dividend-growing assets like SHD even more. They provide a hedge against that persistent inflation. It is all connected, man. The jobs, the Fed, the inflation, the market. It is one big system, and once you understand how the pieces fit together, it is not scary anymore. It is just a puzzle to solve. And the solution is always the same. Keep buying high-quality assets and keep your expenses low. Okay, now I am really going stay focused, stack those shares of VOO and SCHD. I will see you at the top. One last thought. Remember that the stock market hit 7,400 even with all the uncertainty. Imagine what it will do when things actually stabilize. Do not miss out on the greatest wealth creation event of our generation. The time is now. The person is you. The strategy is simple. Go get it. See you next week for another deep dive into the numbers. Peace.